Howard Marks says that the U.S. economy has hit a turning point marked by rising interest rates and economic challenges. This can cause issues for the investors who are expecting gains this year. Do you understand what he is pointing at? Howard Marks believes that the era of easy money in the stock market is over. The decline in interest rates over 40 years has led to easier borrowing and inflated asset prices. During this, the U.S. economy is undergoing a shift, challenging businesses and governments to refinance debts under stricter terms, powered by the COVID-19 pandemic's impact on remote work and rising interest rates, particularly affecting commercial real estate. Marks says that the U.S. government bankruptcy risks are high due to increasing debt and rising interest rates. He is emphasizing the common investment mistake of predicting the future, advocating rational, long-term strategies, and highlighting the impact of psychological factors on short-term stock performance. Notably, medium-sized banks in the United States, some of which are quite large globally, report unrecognized losses totaling $558.4 billion by the end of Q2. This is a result of growing debt and rising interest rates. As an expert, he is advising investors to stay calm during market volatility, presenting opportunities to acquire discounted, high-quality businesses. You can get started with your investment plans to keep your financial journey safe by clicking the link in the description and get a free account to access valuable stocks today. And for more videos, you can also subscribe to our channel.